Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Derren Martin, Director of Valuations at CAP HPI, joining us for his roundup of how trade values performed over the course of February. Welcome back to the pod, Derren.
Thank you, Curtis. How are you?
I'm very well, thanks. Very well indeed. You okay?
Yeah, very well, thanps.
Yeah, another busy month for you, no doubt.
Yeah, always
It's
good.
always the same, is it ever not?
Yeah.
I suppose it's never not a busy month, is it, these days, to be fair? We always say it, but...
It's actually harder work when values don't move by much, to be honest, because you have to really dig into the deal. It's not quite as obvious with regards to the data then. So it's been another busy time in February.
Yeah. Now we're approaching March as well, which everyone will have a focus on what happens in March, won't they, next?
Yeah.
So, I mean, as always, we always talk about what the key headline number is for the values at 3 years 60 and how they fit into, obviously, recent movements and previous movements at the same period in time. So what is the headline figure this month then, Derren?
So the headline figure's 0.7% up at 3 years. So that's a positive movement. It's the first positive movement we've had since March of last year, so 11 months ago. So definitely a relatively strong market. In comparison with previous previous Februarys, I mean it can be a month where I think it's the fourth strongest February we've had since Cap Live. But we've had a few times where values have dropped slightly, but it does tend to be a month where values don't move by much. It's not a volatile up or down month generally. We tend to get stability in January, and then in February you get a small increase. It feels very much like sort of going back to pre-COVID seasonality, to be honest. The first couple of months of the year have been pretty healthy. There's not been too much volatility. If you think about it, this time last year, we were in the midst of all the EVs dropping in value considerably. I think we dropped EVs by 7.5% this time last year. So on average, so then some went by far more than that. So it's been a relatively healthy and stable month.
And we always talk about live and the need for live rather than just wait until the monthly figure. I mean, how has it gone through the month? Has it just been a nice, steady progressing? Have you kind of seen the month sort of strengthen on a regular?
It has to a degree. Initially, when we're in the first sort of few days of the month, we thought it was going to be stronger. Actually, we were predicting it to be maybe a sort of a 1.5% to 2% increase because it did feel really strong. A lot of dealers that we've spoken to have sort of expressed how much they're having to pay for cars and that it is a very strong market and they're having to pay over cap for vehicles. But within the data that we've seen, it didn't strengthen particularly from there. It kind of stabilized. So we're seeing sort of it hasn't moved up by much in the last sort of 2 to 3 weeks. It was that first week where we had a little bit of movement, and then over there it has been just increasing gently since then. So the live data remains so important, and there's lots of differences within the data with values going up, some going up and some going down, especially again in that EV world is a little bit mixed. But overall, it has been fairly steady through the month. Nothing dramatic happening.
And Derren, I mean, you often say the devil's in the details. So maybe turning to some of the trends that you may have seen across age bands. Did you notice anything particularly notable in February?
So age band wise, so there's a 0.2% movement up at 1 year 10. So again, positive, but not quite as positive as that 3 year point. It's probably no coincidence that the 3 year point is the strongest of the ages. That's where the shortage of vehicles will be. From that is sort of 2.5 million fewer registrations in the market that have happened because of COVID and semiconductor and other component shortages. So that 3 year is the strongest. We've actually seen a little bit of weakness at the 10 year point. Some of that has been led by high mileage vehicles being, we've certainly noticed that they've not been in so much demand. Maybe that older age has just peaked. That's been the strongest for quite a while out of all of the age bands, that sort of bog standard, cheaper necessity purchase. So that's been the weakest area. But overall, apart from that older end, some small movements up across the ages, 0.6% up at 5 years as well. We have seen that cars, the strongest sector is Super Mini. That's gone up by 2.4%. So a really strong performance for Super Mini. And then the second strongest mainstream sector was City Cars, which has gone up by 1.6%. So there's definitely some strength in those types of vehicles, which dealers are happy to stock because they're cheaper than SUVs. Consumers are keen to buy. And obviously, a lot of the market is taken up by SUVs now. So there's less of those cars around, fewer vehicles within those sort of sectors. So they've performed quite well, and picked out some examples there that have done well. The Hyundai i10 and i20 both done well, have gone up. Clio, Ibiza, Corsa, Peugeot 108, the Citroen C1 and the Toyota Aygo all have stood out as going up by a few £100. So definitely strong for that area. SUVs have gone up by slightly more than the average, 1%, but the devil very much is in the detail for SUVs. But overall, a pretty strong performance for them, with small and medium ones actually performing slightly better than large SUVs on average.
And that's particularly interesting what you're saying about super minis and city cars, because I seem to recall when we were talking last month that they performed well in January as well, didn't they?
Yeah, they're a mainstay of what dealers will want to stock, so there's tend to be competition for them, and that's why the prices go up, particularly if you're looking at cars in good condition, reasonably low mileage. They're the ones that everybody wants, and as I say, they're fast moving off forecourts as well. Yeah. So they're ones that can sorry, my emails are going mental here. So they can tend to be ones where the dealers are really keen to stock, so the prices go up on both those city cars and those super minis. Lower medium has gone up by 0.6% as well, so that sort of Astra size vehicle, Astra Focus size, that they can tend to do quite well as well. And there's just an abundance of SUVs, so if you're looking for something different to that, you've got to pay for it.
And I mean, you referred to obviously EVs and what happened last year with EVs, and last month I think you reported EVs and plug-in hybrids were pulling down the overall average. How did they perform in February? Is that still the case? There's still a bit of weakness in that battery electric vehicle market and plug-in hybrid that is just softening that overall average?
Yeah, it's a continuation of the theme, really. Electric vehicles on average have dropped by 1.7% at the 3-year point and by 2.3% at the 1-year point. And plug-in hybrids have also dropped by just under 1% at both those 0.9 and 0.7, 1 year and 3 year. So, and everything else is in a positive. Petrol is the strongest performing fuel type. That's gone up on average by 1.2%. So consumers that's still their sort of bread and butter, the petrol vehicle. We're pushing back the ban to 2035. Maybe that's taken it off some consumers' sort of shopping lists for the time being anyway. Although we're seeing more and more EVs selling, but perhaps not enough to mop up the volumes that are going to be coming back. There has been weakness there, but it's really mixed around that electric vehicle sector again. We've seen around 2/3 of values that we produce have dropped on EVs. Around just under a quarter have remained level, and just over 10% have actually gone up. So this time last year, values across the board were dropping on EVs. There was nothing that was good news there, but there are some pockets of strength there. The Seat Me, the Zoe, and the EQA, so some different vehicles there. They've actually all gone up this month. But then we've seen some relatively large drops on Vivaro Life, Fiat 500, and the Enyaq. So it does remain really mixed in that EV world, and still sort of jostling for position. But there are a lot more cars now that are in that sort of 20 to 30 grand bracket that are reasonable value. So there are, as they say, there are more selling, but it's not as many as maybe is needed with the ZEV mandate, and more EVs going to be coming back into the market.
I mean, you mentioned a few of the EVs there. Anything sort of stand out, either strength or weakness in sort of petrol, diesel, hybrid products at the minute, or is it fairly stable? Is there some standout real performers or anything?
What have we got on the biggest risers? So we had the Skoda Karoq has gone up quite a lot this month. Alfa Romeo Giulietta Diesel, so a bit of a mixed bag there. Mazda MX-5 has gone up. I guess it's a bit of a seasonal vehicle. The Corsa stands out. It's gone up by 5%. So a mainstream vehicle where there is plenty of volume around, but as I say, that's in that sector that is desirable. So a bit of a mixed bag there. Renault Captur's gone up. C4 Cactus. So a bit of a mixed bag. So even when you talk about SUVs coming down in value, maybe at that larger end, there has been some strength as well. And as I say, it's just not been as strong as super minis and city cars, but it's still been strong. So some real. I wouldn't say a mixed bag because there has been quite a few things that have gone up, and petrol is the best performing fuel type. But yeah, you've got some convertibles, diesels, all sorts of things that have been going up this month as demand is fairly strong, and the wholesale sources are putting their prices up.
Yeah, I mean, it does sound like you said right at the start there about being harder to manage when the market's like this, but that sounds of it keeping an eye on those, because didn't seem or doesn't sound like there's anything single trend. There's a lot of sort of diversity in terms of what's happening.
Yeah, definitely. We look at everything in isolation. So we'll look at a model range, the latest by age, by plate, by mileage, and so it can be really mixed with that when you get the data that you can see there. And yeah, there's been some weakness in things like the E-Class, Mercedes-Benz E-Class petrol hybrid has actually been the biggest faller this month. But then you've got some electric vehicles, but yeah, mixed bag across the risers and the fallers really. But overall, I would sort of summarise that it's been as I say, a small movement up. So overall, it's been quite strong, but there has been some weakness within that as well.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
And Derren, every month within the editorial, you poll the views of the auction houses. What were they telling you about stock levels and demand compared to January?
It's been another positive month. The auctions are doing well. There's plenty of attendees, plenty of people logging online. 60% of them said stock levels were increasing. The other 40% said they were relatively stable, so level with January. And that's similar to what we saw in January as well. So some positivity on the stock side. So and that's obviously good to cope with the demand that's coming in. Demand improved for almost 3/4 of the auctions that responded to us as well, with the others again saying that it was a similar picture. And conversion rates, which we always ask about as well, and conversion rates are going up for most as well. So some definite positive signs, a continued positivity, I would say, from the auctions, and that's been like that since Christmas really. So that they're having some good times, and the volumes that we're seeing in the sold data, which we get from a wide variety of sources, but not just the auctions, but they're nearly back to pre-COVID levels. Really, we're about 10 or 11% down on volumes that we received last year, but that's improved this year. So there are definitely more cars selling.
And I know over the course of any given month, you talk to a lot of dealers. What have they been telling you about retail activity?
Retail activity is good. It's not through the roof, but it is good. I would say probably the start of the year has been slightly better than they were hoping for, based off what happened in the final quarter of last year. There was a degree of trepidation, but it's performed. It's been pretty good. So every dealer that we've spoken to has been doing okay, has been doing well, and that's why they're out replenishing their stocks, and that's what's pushing prices up. And I think with regards to retail pricing, there have been some drops, but that tends to be more on the vehicles that are that have been in stock for a while that they need to reduce. And obviously, if they bought cars in December, some dealers can afford to advertise them slightly cheaper than if they bought cars since, because prices have been going up generally. So yes. So they're pretty happy about how things are, and I think with a view for the next month or so, they're positive about what happens next as well.
And talking about what happens next, and obviously, we're walking into a crucial month now with the March plates, and there's I think the mixed views on what order banks are looking like as we sort of move into the new plate of March. I mean, what's your view on how you think prices will perform as we enter that new plate month now?
I think used prices in March they'll carry on being strong. We're predicting a small movement up on average. As I say, devil always in the detail, and there will be winners and losers in that. But the new car activity from March doesn't tend to affect the used car market until you get further into March or even April, as those part exchanges and fleet returns hit the market. So it's going to be fascinating to see what happens with new car activity, because obviously you've got the ZEV mandate in place, and manufacturers pushing very keenly on electric vehicle product. A lot of that is going to fleets though, but they'll be trying to encourage retail activity as well. So but overall we think that used car demand will remain strong. Then you get into end of March, you get into the Easter holiday period. Maybe that's when you start to have a little bit of a dip away, but that's right towards the end of the month this time. And as I say, more volume won't have hit until that sort of period, or even into April. So March we think will be strong for values. So when we cut off in March for April's monthly, for those subscribers of monthly values, we would expect that to be quite a small movement up during the month of March.
So it sounds like much of the same then in the same direction
think
as
so.
Feb.
Yeah, last year values went up by around 0.5% on average in March, and I wouldn't be surprised if we see something similar this time around.
Yeah, like I say, it's going to be interesting, like you say, for particularly the franchise new car dealers with everything that's going on at manufacturer level and the mandates and everything else that's taking place. But as you say, for used cars, they are in demand, aren't they? And dealers are certainly out in the market now, plenishing back up stock and as the market returns to some kind of reasonable demand.
Yeah, it's just that EV world could be a little bit more volatile. As I say, there's been some up, down and level within that, and I think that will continue to be the case. So there are still some that probably look a little bit expensive and need to be adjusted, whereas others are between that 20 and 30 grand mark. They look good value. You can get some BMW, Mercedes, Tesla product in that sort of price range now, which is obviously very attractive for a consumer. But there still remains no incentive for the used buyer. So manufacturers are pushing new car activity. You've got to remember there needs to be a used car buyer at the end of those vehicles for them to have a strong residual value and finance rates. So there still needs to be some encouragement for the used car buyer.
Yeah, it sounds like a little bit of volatility still there in the BEV market. I mean, needless to say, Derren, it's always a pleasure to have you on to give a little bit of context to particularly that headline figure, and as you said right at the start, that devil in the detail and the complexity that's behind, and the amount of work that you and the team get into sort of managing these values. So, as always, thanks for coming on the podcast today. And for a deeper dive into the February figures that Derren's sort of just been talking through there, then please do check out the cap-hpi.com website for the full editorial, or follow Derren through LinkedIn, and it'll be shared this week, and it'll be available from Tuesday morning of this week. So if you do want to get a deeper dive into the detail and what's involved with it, then please do check out the editorial. And again, thanks, Derren, for giving up your time today and coming on the podcast.
Nice pleasure. Thanks a lot, Phil. Curtis.
Yeah, many thanks, Derren. Good to have you back on. That's all for this special weekday Motor Trade Radio podcast. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.